I have learned that if one advances confidently in the direction of his dreams and endeavors to live the life he has imagined, he will meet with a success unexpected in common hours. Henry David Thoreau. My friends, advance in the right direction. That is 10 to 15 minutes each and every day, tracking these markets, learning how to follow price movement, because that is all that matters. And again, we live in strange times, my friends. A war raging in Eastern Europe. The government spending money we don't have for future generations. Inflation, energy issues, China, Russia, Europe itself struggling to make it through the winter. They'll probably make it okay through this winter. Next winter, that's a whole nother thing. But we'll deal with the present. Now, markets are not open on Friday. So this is the weekly review and forecast. We'll be back in business on Monday after the Christmas holiday. Wish everyone out there happy Hanukkah, Merry Christmas. Everything down for the day. The NASDAQ 100 down the most, just hammering down 2.45%, hemorrhaging. Let's talk about where we are. We look at the S&P 500. We usually start there. On the half-day chart, we can see that things tried to pop up yesterday and then rolling over hard today, down 1.43%. Where does that put us on the two-day chart? It has gone red a few days ago. We're into 3 candles now, reaching a lower low. Not as big a candle as we've seen those past two-day candles, but a hammering down as it goes. So we are red on the STC, red on the candles below the 200 EMA. Now we look at where we are on this weekly chart. That's important to see also. Again, last week red spinning top, this week down red candle, still green on the STC, and we see that we are heading toward the 200 exponential moving average. When we go through that, of course, for our intents and purposes, we will be deeply in the red, hammering down, and there'll be plenty of time in the future, my friends, to short this market, if indeed that is where we are going as we end the year. Pretty dark out there, but, we saw that in the past when things hammered down, and then things turned around starting in mid-October, up all the way through the end of November. So starting to roll back down again. Maybe it's going to be a cold, dark winter. We shall see. We'll be patient. We'll wait. We got all the time in the world to watch how things go our way. Now let's go to the NASDAQ 100. Well below the 200 EMA, in the red on the STC. Saw where things popped up on yesterday. When they popped up on Wednesday. It's hard to keep these days straight. Down on Thursday as we saw things accelerate down, and in the morning 2.45%, as I said earlier. Whew, that's a hammer down. And we look at our 3 strong down 2-day candles. Again, just hammering down further and further. Red on the STC. Where are we on? Oh, and by the way, when you look at where we are on the EMA, you can see it poking its head up at the top of the screen. There it is. So we're well below that. And where are we? We are in, of course, bear territory now as we push through the 200 EMA. We haven't seen things go red yet on the STC. We'll be looking for that weekly vertical crossover, a heading down, or when the STC goes red. So again, some real issues there. So stocks decidedly weak as we go into Christmas. What about bonds? Well, bonds were the least down for the day, actually 0.02%. What do we really see happening? Just sort of a sideways slide throughout the course of the day. Red on the STC, below the 200 EMA. We look at where we are on the 2-day and the weekly. And remember, bonds are very negative as far as the position on the exponential moving average, well below it. We had many 2-day candles running up since things turned around in the bond market around November the 10th. And of course, all of that sort of came to a close right there in mid-December. And then for the last two-day candles, a hammering down, still though green on the STC. And when we go to the weekly, you can see that the weekly also is still green. It is just like the 2-day, well below the 200 EMA. I have to really crank this in for you to even see it. There it is, the exponential moving average. So we've been in bear territory for a long time on bonds, and maybe we're going back that way. We'll be waiting, watching, seeing if we go from green to red on the STC. We're just now having this first week of down movement after 5 prior weeks of up movement. Now let's talk about gold. We talked about things trying to go our way. This is the 3rd failure of gold to catch fire. It tops out after about, look at this, 3-4 candles. So that's a day and a half, 2 days of movement, and then rocks back over, which is exactly what it did this morning. Down for the day 1.21%. Again, gold is just not being our friend right now. And it went back to red on the STC in the morning. So gold just ain't cutting it. It is above the 200 EMA. Now we look at where gold is on the 2-day chart. Gold is still green, still above the 200 EMA. What is it doing? It keeps hanging out and just can't catch fire. Is this being manipulated? Are we seeing a lot of naked shorts in gold trying to hold the price down? What's happening? Gold down for the day 1.21%. Look at where we are on the weekly chart. Again, gold is blown through the 200 exponential moving average, representing, of course, 200 weeks of movement there. And what are we waiting for? Well, you can see over these last 2 weeks, it's sort of stopped out and stalled. It did that before on the prior 2 weeks. So again, I wish we could see gold take off and just explode. I mean, we did see when it first took off, moving up strongly, but you can see how the candles have just whittled down. So again, not a successful gold trade. Sorry to see that. Waiting for gold to get its act together and to really ramp up and blow it out, but not happening at this time. Lastly, we will go to Bitcoin and see where we are there. Bitcoin really just flat for the day. Now, if we look at this nice tight screen, you can see where Bitcoin moving around, popped up some, popped down some, and of course it's just staying in this $16 zone or so. And below the 200 EMA, when we look at where we are on the 2-day, and again, bring that into the picture, you can see how Bitcoin, again, is not recovering at this point. Green on the STC, which doesn't mean much to us at all, because of all going on with FTX and people just not trusting maybe a lot of these crypto exchanges, maybe cryptocurrencies themselves. My friends, that's fine. We want there to be market capitulation. We want to see things bottom out, stall, go to nothing. That is all well and good. Once that bottom hits and then starts to recover and really starts to build some momentum, that'll be great. And we will see that on our charts. We will be able to see that, read that, and we can practice trade that in the right direction, which is, of course, up. We look at where we are on this weekly chart. You can see where we had those 3 weeks of big down movement. These last little 2 weeks trying to do something, it's just stalling there and hanging there. So some point, I'm hoping Bitcoin will take off, but we've seen it try for 4 weeks and then start to die again back on that week beginning in mid-August. We saw a couple of weeks in late October where it popped up and then really hammered down again, hoping we were setting that base at about the 1820 mark. Didn't happen. So maybe it'll set a base around the $15.30, $15.50, $16 mark and then go up from there. Whatever it does, we'll be standing by. My friends, Merry Christmas, Happy Hanukkah. Thank you so much for being with us. We appreciate our Patreon supporters. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.